Macquarie Bank and ANZ Bank have agreed to pay a total of 11 million ringgit in penalties after admitting to attempted cartel conduct relating to the setting of a benchmark Malaysian rate back in 2011. The Australian Competition and Consumer Commission said ANZ Bank had admitted to 10 instances of alleged cartel conduct and Macquarie to 8. ANZ will pay 9 million, while Macquarie will phony up 6 million Aussie dollars. According to the Commission, the case involves Singapore-based traders communicating via private online chat rooms, exchanging information regarding daily submissions on the ringgit fixing rate to be made to the Association of Banks in Singapore. For now, it is up to the Australian Federal Court to decide whether the agreed penalties are appropriate. In a separate statement, both banks said it has already fired employees who are involved in this case. AirAsia is planning a Hong Kong listing for a holding company that will comprise all of its ASEAN operations and entities. In an interview with CNBC, Group CEO Tony Fernandes said the listing of a new entity, ASEAN Holding Co., will create a single economic vehicle, allowing analysts and investors to see the group as a whole, rather than just the Malaysian operation with one line of associates. However, the current priority is to list AirAsia Indonesia and Philippines first by mid-2017, before the ASEAN Holdings IPO. Fernandes doesn't believe that the various listing would dilute the AirAsia brand, although he admitted that regional regulations will be a tough hurdle. Sime Darby posted a 37% growth in its first quarter earnings. Net profit stood at 443 million ringgit, up from 323 million a year ago. The jump was mainly due to its motor division, which saw higher sales of vehicles in the domestic market as well as in Singapore. The group recorded a marginally lower revenue of 10.1 billion ringgit, down just 0.7% from last year. Looking ahead, Sime Darby expects volatility owing to commodity prices and forex rates and the uncertain market environment to remain a challenge. Still, it believes that it will be able to have a satisfactory performance for FY17. It's aiming for a full-year net profit of 2.2 billion ringgit and a return on average shareholders' equity of 6.4%. Property developer Ma Sing is cutting its FY16 sales target by almost 22% from 2.3 billion ringgit to 1.8 billion ringgit. This is in face of challenging market conditions, global and domestic uncertainties, and lack of incentives for private developers under the Budget 2017. The company, which just posted its third quarter results today, said it is eyeing acceptable growth opportunities without taking on too much risk. However, it believes that long-term demand for property will continue to be supported by a young population demographic, conducive interest rate, continued GDP growth, and urbanization. For the 3 months to September, Ma Sing saw a 9% rise in net profit to nearly 92 million ringgit. Revenue, however, fell 5% to 732 million ringgit. Telekom Malaysia saw a slight dip in third quarter net profit due to higher operating costs and forex losses. Earnings came in at almost 160 million ringgit, down 4.2% from 167 million ringgit. The telco says the higher operating costs came from the accelerated depreciation of WiMAX assets and the write-off of dismantled sites. Revenue was flat at just under 3 billion ringgit on a drop in voice and data services. TM did not declare any dividend for the quarter. Group CEO Zamzam Zairani Muhammad Isa said TM has remained resilient despite the challenging environment. Moving forward, the telco giant plans to introduce a new greater value broadband package offering for non-unified customers in 2017. That's on top of its broadband improvement plan initiative, which will be implemented next year.